today's edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by Agri Gold. This is Cesar Delgado. I am your host of today's program. We're glad you're here on a Tuesday afternoon after the inauguration in Washington, D.C. We will see for the commodities and ag labor in the Packers, the 45Z from the Biden administration from last week. Well, yesterday was Martin Luther King Jr. Day and inauguration in Washington, D.C. We will see for the commodities markets for today from the fear of losing with tariffs. We were talking about it with Dan Hussey from Zaner Hedges, and we will have a conversation about this harvest season for today with Kevin Gall from Agri Gold in Central Illinois. It's cold outside to thinking about this planting season like in the field, but it's going to be warm up in the 30s in Central Illinois. This winter is very mild, but we will survive another day in Central Illinois with the cold weather. Otherwise, this is your rural news sponsored by Agri Gold in Central Illinois. Next Secretary of Agriculture, Brooke Rollins, will be in the Senate Ag Committees for next Thursday in Washington, D.C., but the space for the tariffs is very concerning about the agricultural industry. The Illinois Chemical and Fertilizer Association is underway in Peoria. There's training for dicamba and 4-2D by the University of Illinois Extension in Peoria at the Peoria Civic Center. Finally, the past weekend was the Quad Cities Farm Show in Rock Island, Illinois. There was a display on equipment and information for the livestock equipment at the Quad Cities Farm Show. You can listen for more agriculture news ahead on YouTube Back Roads of Illinois. This is your rural news for this afternoon. Yesterday was Martin Luther King Jr. Day. Dr. King was fighting for the vote right for African Americans in 1968. Then he went to the National Mall with other civil rights icons like Rosa Parks and Malcolm X. Martin Luther King gave an infamous speech in Washington that was, "I have a dream" speech. It were desegregation, voters' rights in the South. So, Dr. King was asking for the Civil Rights Bill by the President Tyler B. Johnson after the death of the President John F. Kennedy in Dallas, Texas in 1967. Then the bill was signed into law in 1968 by the President Tyler B. Johnson. Did you remember that Martin Luther King was shot in Memphis, Tennessee? He was shot in 1969. In 1985, Martin Luther King Jr. Day made a national holiday and federal holiday by Congress. You've been listening to Back Roads of Illinois. We were talking about this harvest season for Central Illinois with Kevin Gall from Agri Gold in McLean County, Illinois. How are you today?
I'm doing great today. It's great to have an opportunity to work inside where it's warm today. This Arctic air has really put a chill on this week across the US with wind chill values as low as 30 below this morning. So again, thankful to be inside.
Me too, as well. Kevin, how was the yield with the drought on this harvest season?
Well, overall, when you consider 2024, I think yields are probably better than expected in many parts of Illinois, considering the dryness that developed toward the end of the growing season in 2024. USDA released their final yields about 10 days ago on the January crop report and reported a record corn yield for Illinois at 217 bushel an acre. And soybeans were at 64 bushel, 1 bushel shy of the soybean record in Illinois as well. So overall, I would say yields were better than expected, but I do think there was some variability in yields depending on soil types, planting dates, and maturities of the crops that we planted, and how that interacted with moisture deficits late in the season. What really drove yields in Illinois, in my opinion, was the July weather. July precipitation was in the top 10 wettest Julys on record out of 132 years of record keeping. July temperatures were in the top 20, coolest on record as well in 2024, adding to great pollination weather and longer ears, more kernels in length. Other areas, such as the Eastern Corn Belt, probably didn't have such favorable conditions. And you can see the yields were definitely suffered a little bit in those areas where rainfall was definitely less. Dry conditions in June, I think, slowed down disease development as well, contributing to less stress on the crop, as well as minimal nitrogen loss as well. That typically occurs when spring rainfall is abundant. Soybean yields were also good in many parts of Illinois, but maybe not great once the harvest was completed. It really depends on when those soybeans were planted. Ideally, we want to plant beans as early as possible to maximize no numbers and pod count. We also saw full season beans may not have been the best this year just based on planting date and amount of rainfall late in the season as well. So some of those mid to early maturity soybeans actually did really well because they were already filled out prior to the dryness setting in late in the season. Some of the later harvested soybeans also got really dry with some of the moistures harvested at 8 to 10% were common. Obviously, when soybeans are harvested at moisture, you could have a 3 to 5% yield loss just due lack of water weight compared to that standard 13% market. That translates to about $30 to $50 an acre profit loss on soybeans that are dry. But I think this is a great opportunity.
With your product or services for this growing season for growers?
Well, I'm always excited to talk about the AgriGold portfolio. We continue to offer elite genetics, elite products that are consistent in the marketplace that offer great return on investment for our customers. I think one benefit from the AgriGold lineup is we are looking at several different trait options that include Liberty Link or Liberty herbicide tolerance to help control weeds, including Stacks, Smart Stacks Pro, Power Core Enlist, and Agrisure traits as well. So you can get a really a broad spectrum of genetics, but also a huge offering of trait technologies that can fit any grower or operation across Illinois.
What's new with the hybrids?
Overall, the hybrids that we have today are a lot more stress tolerant to hybrids of yesteryear. So even though we have some stressful conditions, say in June timeframe, a lot of these hybrids can hold back, weather the storm and then really pack on yield late in the season. So we can never give up on our genetics today. There's a lot more yield potential and better stress tolerance today than current or past hybrids. So again, we're very fortunate with the technology that's available today and the genetics that we plant as well.
Do you have any final thoughts on this planting season?
Well, we're talking here on January 21st, and temperatures are 30 below wind chill. But planting season is going to be here before we know it. One thing to expect, though, this year is going to be different than last year. And we can't have tunnel vision on how things performed last year and think it's going to be the same this coming year. Every year is going to be different. I think that is for certain. But I think this is a great opportunity to take this time, get ready, get prepared to plant when the opportunity arises, especially with soybeans. I think that's where yield is really driven with early planted soybeans, and then making sure we're planting corn into good conditions to maximize our rooting environment. Obviously, that root is the foundation of high yields. So if we maximize rooting environment, we can maximize that entire plant. Also understand that input costs are high. So we need to make sure we're doing our due diligence and researching what products have the best return on investment for our operations. But reach out to your local agri-gold corn specialist or agronomist for support this season.
Yes, that's true, Kevin.
Thanks, Cecil.
Thanks, Kevin.
Thank you.
Stay warm.
You do the same.
This
See you
is
later.
Kevin Gal from Agri Gold in Central Illinois. Well, yesterday was Martin Luther King Jr. Day and inauguration in Washington, D.C. We will see for the commodities markets for today from the fear of losing with tariffs. We were talking about that with Dan Hussey from Zaner Hedges. Hi, Dan, how are you today? Let's discuss about the commodities markets, especially in the grains markets for today. Could you tell us about that?
Yeah, well, I'm doing good. It's definitely very cold here and across most of the Midwest, and I know most our listeners are your listeners already know that. And that probably is in the very short term helping to boost some of these markets, particularly maybe wheat and, well, not so much cattle the last few days, but we'll get to that as well. But yeah, tariffs are definitely the big news that everybody's looking out for. Haven't had much guidance from Washington yet. I will say that maybe the second round here with Trump in his presidency, Trump 2.0 as some people are calling it, there might be smoother sailing than we originally anticipated, mainly because China, the United States, and others probably know how to deal with each other. But sure, let's dive right into those grains.
What is the technical aspects on the grains markets for right now, Dan?
So today was a great example of a very strong upside move that took out highs of the month, I believe, in corn, wheat, and beans, all respectively. Let's begin with March corn, trading up 5.75 cents on the day to 4.90, continuing its uptrend. We're above all the major moving averages, and that big $5 mark is coming in on the upside. So I think that the market is now hunting out where that resistance would be and really trying to start, to price ration some of that demand that we're seeing out there. We see export inspections are beating trade estimates every week. We've seen some flash sales in both corn and beans over the last several weeks, and exports have been decent, although not as strong as I would have assumed they'd need to be to drive these prices higher. But like I said, almost all the major technicals we've cleared through over the last few weeks, and we're in a really big short covering rally, given that at contract lows back in August, the funds were short nearly 300,000 corn. They've now flipped to a net long of, I think, estimates coming in around 300 to 310,000 long in the corn futures, which is pretty long. Soybeans closing up the day 33 and a quarter cents after gapping up. Uh, we are now above the 100-day moving average, which has been support down at 1021 this last week. The 200-day moving average up at 1077 is probably the next line in the sand the market's heading towards. And of course, that big round $11 mark to the upside would be the next area of major resistance to consider now that we've closed above the highs of January and at a new high for the year 2025. Wheat markets were green across the board, being led by the KC wheat. I've been talking with a lot of traders about the KC to Chicago wheat spread, which got relatively pretty tight and is starting to widen out now. You favor the KC and those hard red winter wheats to have more of a premium in them than the Chicago, and we're starting to see that return. And also the wheat to corn spread, which got really tight there, I think as tight as 50 cents, has now widened back out to about 70 cents, and I anticipate it going back to about $1. But Chicago wheat closing up on the day 20 cents, back above its 55-day moving average. Clearing resistance from the month of December around 555, and I think the next major stopping point's around 575 to the upside, and then in the KC leading the way up 27 cents. That cold winter weather I mentioned earlier seems to be a driving factor for KC and those winter wheat prices now that we've got a really nasty winter without much snow cover, leading to potentially some winter kill to have to talk about.
What is the trends for spread for corn and beans?
Sure. I would say that the corn and bean right now, again, we're being led really by the beans to the upside. I think that we're going to continue to see that the beans lead the way after the USDA showed us a really tight balance sheet in the last WASDE report. They tightened up that balance sheet. We've also had some adverse weather, or rather weather that we hoped to come in South America that never really came to fruition, didn't get those final rains, which might have deteriorated the crop in South America a bit. But prices rallying right now in the United States, and we're seeing an inverted spread market start to take hold in the beans. July Nove right now at 38 cents over. That suggests that consumers of soybeans or crushers need them now, and I think that'll continue to be a driving force. And we may even see some exports from South America and imports into the United States of soybeans, given the high prices we're seeing in the United States. They're going to seek that out. They're going to seek even some crushers on the eastern seaboard will seek to bring some of those beans in from South America. But the corn to bean ratio likely needs to tighten up a little bit here and favor the beans, as we've seen over the last week or so. It's moved about, I think, 40 cents, which is a pretty substantial move to buy some acres for beans going into this next planting season.
Dan, what is the long term on the technical side of the grains?
Well, the big low in price and that contract low we made to the end of the year and really starting 2025 seems to be a big hallmark for the low end of pricing spectrum. The question now is, how high can we rally? We're into a period that we would refer to as price rationing demand. If balance sheets have tightened up, the big question is, how high can it go now? $11 to the upside is a major level that the soybeans are going to need to break through, and I think the long-term technical picture is going to probably find. I hate to throw a wet blanket on this fire rally this raging rally. But I do think that we're going to struggle breaking through 11 and getting a little bit higher than that. But in the near term, that just means prices have a little bit higher to go, right? $5 is probably a very similar level for corn. And I'm not saying that they have to stop at 5 and 11 respectively, but I do think they're major levels that producers are going to try to take advantage and do some selling here. And let's also not forget the fund category and the CFTC reports has gotten very long, both corn and soybeans. And their position sizes has gotten not to records, but corn's getting up there, which means we might be running out of buyers, so to speak, in that fund category. And the second they decide to start liquidating that position alongside producers selling at what are pretty advantageous prices now that we haven't seen since last May through July, I think it would behoove sellers or producers not to take advantage of that. And so my big question for the market right now is, are we going to go into a long-term period, maybe even lasting a couple of years, of a very large range in price, from $4 to $5 in corn, giving a dollar wide range for it to trade in, from $10 to $11.50 in beans, giving a $1.50 to $2 range to play in. That's the longer term picture I'm still focusing on and thinking might come to fruition here, because without seed being in the ground for next year and without a weather market, I do think that we probably have there is a cap on how high prices can go until we get into those that next cycle, if you will, into next spring and summer, which at that point things might change. But for now, until today, we actually saw them unwinding that a little bit here. I'll start with the front months right now. There's obviously been some strong demand. You've seen cattle prices at cash prices at almost a $10 premium at auctions as far north as North Dakota. And that suggests that there's a lot of demand still out there for both cattle on feed and for fats. And consumer prices for boxed beef has remained very strong as well to help support that. Now, when you look further out to those deferred months, over this last week, we're starting to see prices unwind a little bit, which suggests that maybe some cattle producers have gotten their quotas met, and 200 plus days out, we're starting to see a little bit of that demand start to get squashed. But the pullback that we've seen from a technical standpoint, and as of today's closed, I'll just use the August fats or feeders right now, is right back into that 18-day moving average. And while we found a contract high for the August fats, I would remind everybody that the recent all-time highs for front month feeders are still 30 points above us, and we could see those the race to 300 resume if support is found here soon. Fat cattle, the Feb fats didn't quite make it to their contract highs, but we saw April fats hit a contract high just shy of 200 here in the last couple weeks of trade. A little bit of consolidation here before maybe another run higher, but I haven't thrown in the towel on the uptrend in cattle just yet. But I will admit the price action in the last 2 weeks is certainly giving some pause. And the market is seeing some selling pressure ahead of contract highs and all-time highs up in an area where for cattle producers, for cattlemen, this is an advantageous time to still get some hedging done. I know a lot of that is done via insurance contracts these days, but if you are trading on the board and using the CME, these seem to be pretty good prices to try to get some hedging done.
How is the cash cattle side in the south and the north? Are you watching that?
We are. Let me get. I was just looking at that. It looks like the estimated average dress cattle weight for the week ending January 18th is 876 pounds. So we're up on weights, generally speaking. Let me see here. Where was our five? I was just looking at the 5-day weighted average week rose to 203.35. That's up from 202.25 last week. And the cash trade Friday in the north hit an all-time high. I think it was at between 203 and 206. While in the South they fell down to 200 to 201. I think that was pretty reflective of some of the weather we've seen, but I wouldn't be surprised to see some of those southern prices given the snowstorms, and I think I saw snow falling in New Orleans just yesterday. So there is a cold snap across the whole country that I wouldn't be surprised to see cash prices in the South hold firm and maybe even rise a little bit here. But I'm watching those prices down there as they have pulled back quite a bit, and I'm wondering how the weather of this week will affect that. And that's something I'm watching closely because, yeah, the North we've been at a pretty good premium, about $5 at $5 $5, excuse me, premium there in the North. And I think against the board we were as high as a $10 premium there as of maybe a week and a half ago.
Do you have any final thoughts on the corn markets for next few months?
Yeah, I am cautiously optimistic that we'll continue higher. I think testing the $5 area in corn is probably on the table at this point, if not, in the works. And that's of course in our front months. If you look at out to December corn, we're really stuck in a range between 430 and 460. I think we will probably see us poke our head above this range in December corn. Maybe the 470 to 480 area is on the table now. But how we react in that December corn, I think, is going to be really important here over the next few weeks as to kind of determine how high this market can really run at this point. I'm fearful that near-term corn contracts have gone parabolic and are, going screaming right into this level at a time when our fund category has gotten very, very long. So I'm cautious that I'm not saying we're near a top just yet, but the market's overbought at this point, and it can stay overbought longer than shorts and sellers can remain liquid. But it is something that, hey, history tells us it doesn't stay up here forever. And for producers, I cannot stress enough. If you have the means to be able to get some sales done and get some hedging, these are the best prices we've seen in the last 6 months to a year. So it would behoove you not to take advantage of it while the time before harvest and while we still can.
Thanks, Dan. I enjoyed our conversation.
Absolutely, Caesar. Thanks for having me.
This is Dan Hussey from Zaner Hedges on back roads of Illinois. Markets for this afternoon, sponsored by Kyle Bumstead. He's your commodity broker from Allendale Incorporated. Corn futures is up at 3 to 6 cents. Soybean futures is up at 5 to 4 cents on the quarter. Chicago wheat is up at 9 to 4 cents. Let's take a look for the livestock markets. Cattle is down at 3 to 5 cents. Feeder cattle is down at 3 to 6 cents. Lean hogs is down at 5 to 10 cents. This been your commodity markets for this afternoon. Thanks to Dan Hussey from Zaner Hedges and Kevin Gall from Agri Gold. You can listen to our show on YouTube and wherever you get your podcast. This been Back Roads of Illinois. I'm Cesar Delgado. You have a great day.